lot of scuttlebutt lately about interest rates and what they might do to housing prices as they creep upward.
What is your scuttlebutt saying about interest rates? I mean, what?
Well, rates are going up. Housing prices must be coming down.
I think this is going to be a little more complicated of an answer, so let's look at the data.
A field trip.
Alright, Ash, so what we got here is we're looking at 3 different factors that we're tracking. We're tracking interest rates, which varied over the last 10 years from 2% up to 7%.
Prices.
The average price for Scottsdale, which varied between $300,000 upward to $700,000. And then, of course, we're tracking time.
2002 all the way to 2013 and current.
So what is your scuttlebutt saying?
Well, why don't you explain your chart? Because according to what the media and all the scuttlebutters out there are saying, as the rates are rising, the prices are going to start to come down.
Okay, so what she's saying is CNBC, CNN, anything you read out there, blogs, all this stuff are saying...
Scuttlebutters.
Right. So what we're going to do here today is we're going to look at the last 2 times interest rates either rose by 2% or fell by 2%. So let's look at the last time interest rates rose by 2%. So in 2002, interest rates were averaging about 4.5%, and then till 2006 they went up 2% to nearly 6.5%. So the scuttlebutters say that if interest rates rise,
prices drop.
but why last time?
Interesting, it seems that the opposite is happening.
Wait. So prices were at a little over 300,000 and they went to almost 700,000 while interest rates went up 2%.
Correct.
But the scuttlebutters are saying that interest rates are going to rise, but prices are going to fall. There's this guy, Michael Orr. He says that there's no inverse correlation to interest rates and prices.
In that voice.
Okay, so what we're saying is, Michael, okay, well, hey, when it went up, prices went up. Okay, you're right there. But then I said, well, what happened when interest rates fell? Because in 2008, interest rates went down. For the 2010, they dropped by 2%. So according to the scuttlebutters, that means prices must have rose. What happened?
The opposite. In fact, prices continued to decline during that time. See, the signs of lowering interest rates are a sign of economic trouble, right?
Ashley, well said. Absolutely. Because what they do not realize is that the reason why interest rates go up, or why the government allows interest rates to go up, because they're artificially holding them low, is as the economy is getting better.
The market will bear it.
Right. Because the pool of buyers gets bigger, therefore overcoming the, what do we call that? When interest rates are going to have a...
Interest rates only have an impact on affordability, not demand.
Right.
According to history.
History says that demand will increase, although affordability will be less. Understanding the difference will tell you why there is no inverse correlation between interest rates and prices.
Okay, Jeff, what if interest rates go to 16%?
We're going to need a bigger chalkboard.
We'll see you next time.